Perfect.
Okay.
Good afternoon, ladies and gentlemen. Fantastic to have you here with us this afternoon. It's a sunny, beautiful day here in Calgary, Alberta. I will be talking Canadian taxes. My name is Dotun Ayodele, and I am here with Taiwo Kasali, the principal at CAFT CPA LLP, an Alberta-based accounting firm, and Deborah Akpesiola, CPA as well. And we'll be discussing taxes today. So we'll just talk about personal taxes from an employee's perspective, personal taxes from a business owner's perspective, as well as corporate taxes from a small business perspective. The essence of this evening is to provide you some basic information that will arm you and properly prepare you for the tax season that is here right now. So we're diving right into it. Before we go further, I'd like to welcome our panelists. I have with me Deborah Akpesiola, and she will tell us just a little bit about herself. Deborah, you have the floor.
All right, thank you. My name is Deborah, and I'm the owner and founder of Davio Consult. I'm an accountant, and I'm here to talk tax today. Let's go right into it.
Fantastic. Our other panelist, our next panelist, is somebody that I have bounced tax ideas off on a consistent basis over the last 4 years. His name is Mr. Taiwo Kasali. Taiwo is a firm believer in the power of small business to power economies. So he's dedicated and committed to seeing small business owners grow. So Taiwo, you can just tell us a bit about yourself.
Yes, thank you, Mr. Dotun. Yeah, my name is Taiwo Kasali. I work for a very small accounting firm called CAFT CPA. We mainly specialize in small business taxes, but of course we do other forms of taxes too, personal taxes, corporate taxes, and so on and so on. We do a bit of consulting on this side as well. Yeah, it's nice to be here with you guys today, and I'm looking forward to discussing with you guys and trying to make our people understand that tax is nothing to be afraid of.
Fantastic. Thank you very much for that. So we have probably about 8-9 questions that people have sent in. So we'll take those questions. But in addition to that, if you have any questions, you can post them either on the Facebook video live as a comment or on the YouTube video as a comment as well. That way, we'll be able to address those comments when we get through the immediate set of comments that we have. But before we go into those questions, right? Deborah, since you're the personal tax person, I'm just going to come straight to you.
Okay.
Today is the 7th of February.
Yep.
As an individual, an employee working in Canada, I definitely have a responsibility to file my taxes. What should I be thinking about? What are the documents I should be looking for, gathering and putting together right now?
Thank you so much. For personal income taxes, I'm sure everybody is expecting to receive their T4s at the moment. Some will have gotten it, some wouldn't have gotten it, but we're waiting till the end of February 28 to be able to get your T4s. Apart from that, one of the things that is pertinent right now is, what else can I do to manage my taxes? You need to be looking at your RRSP, you need to be looking at your all your receipts for all the claims that you have to make, the medical bills, all the deductions that you want to claim, for people that have disability issues. Gathering those documents will be the best thing at the moment, so that when March 1st comes, you are ready to file your taxes.
Fantastic. So I hear you talk about RSP contributions.
Yeah.
is there any scenario that makes it non-beneficial for me to contribute to my RRSP? Just asking.
Of course, yes. Of course, yes. Because what RRSP will do for you is to reduce your taxes. But at some point, you might have low income that there is nothing to even contribute to, there's nothing to even reduce.
Yeah.
If your income is not up to taxable income, you don't need your RRSP to reduce any tax. You're not even
Paying
eligible
anything.
for taxes.
Having said that, though, I mean, some people kind of forget that RRSP is actually an investment vehicle for you to save towards your retirement. So even if you're not going to deduct it in that particular year, nothing absolutely stops you from buying RRSP and carrying it forward to years that you might need it. You still get the investment, you just don't get the deduction.
Yeah.
You just don't get the deduction yet.
You don't get the deduction rather, but you get the investment.
You get it in the future.
It's possible that you make the contribution and then because you don't take the deduction that year, some people may think you are losing it.
Carry forward.
No, you're not losing it.
So you're going to carry forward that deduction until such a time as you can utilize it when you have the income.
Absolutely.
Okay. So that sounds like an RRSP contribution is definitely a good thing to do.
Yeah.
Now, you also mentioned other receipts. So I'm thinking childcare, right?
Childcare, medicals.
Medicals. So this is any medical expenses you've incurred which is not covered by insurance.
Insurance,
so we are talking about whatever it is, whether it's drugs, physio, chiro, massage, glasses, dental, any hospital
bills,
wheelchair, crutches, whatever, anything that is medical related that you've spent money on, right? We definitely the receipts for those are a critical part of your tax return.
Yep.
Fantastic. Now, in terms of small business and corporate, now, Taiwo, we are coming to you. What are the things that typically, are the deadlines the same?
Oh, the deadlines are definitely not the same.
Okay.
If you're a small business person, a sole proprietor in this case, or self-employed as the case may be, you have up till June 15 or so to file your taxes. So but you still have to pay taxes that you owe or that you might owe the same April 30th.
Same April 30th.
So it doesn't change. It's just your filing that changes. The payment of taxes doesn't change. So if you think you're going to be owing any taxes, it's best that you prepare your taxes in advance and you pay the right amount of tax, or you might be liable to interest and penalties.
Okay.
And if you're a spouse to a self-employed person or a business person, you can file your taxes alongside with your spouse as well.
Absolutely. So you get that allowance as well because you're married to a self-employed or a sole proprietor. So you can also take advantage of that and file your taxes on latest June 15. But it doesn't really mean that you do not owe tax. If you owe tax, please make sure you pay your taxes before April 30th.
Okay. So there are two timelines here. April 30 for employees, June 15 for sole proprietorships and sole proprietorship and self-employed people, right?
Yeah.
Now on the corporate side, how does that work? So you have an incorporated entity, a separate legal entity through which you carry out business.
If you are a sole proprietor, you are still filing personal taxes. It's just that you're filing personal taxes that has a business component. So there are separate schedules on the personal tax software whereby you can actually record your income and your expenses and so on and so on. So you're still filing personal taxes. Now, if you're incorporated, and that's not what we're here to talk about today, it's a totally separate thing, and that's not that's not due on April 30th. Your filing is based on the year end you've chosen for your company.
Exactly. Okay. Yeah.
So
I
that's
think that's
totally different. But if you are not incorporated, then you are a sole proprietor, and you need to file personal taxes on those 2 days that we've talked about earlier.
Good. So I want to just take one more look at this before we dive into the questions. Now, from a business owner's perspective, or more from a TFSA perspective, because the TFSA seems to be something that people don't talk about a lot, because it's like the money you put there is after-tax dollars, and that's it, and that's it. What are the benefits that you will see in terms of maximizing your TFSA? How does that save you on taxes, and how does that help your personal wealth growth process?
Is that question directed at me?
No, it's directed at both of you, so you are both going to get a shot at it.
Okay. For TFSA is one of those vehicles that government has given to every one of us to take advantage of. Sometimes when you don't look at all these vehicles, you don't seem to see reason for it, because you have to put money aside. Unfortunately, people lose at the end of the day. TFSA is supposed to be something that you can use after you have maximized your RRSP. You can use it to do your investment. Put money into it. It's part of your saving culture. At the end of the day, I'm putting $200 into a TFSA account. It might look so insignificant right now because the income from $200 might not be significant. But over 10 years, the income I make in a TFSA account is not taxable. So if I've made, let's just say over 10 or 20 years, I've made, let's just put it as 10,000. If I've made 10,000 out of my TFSA, and after 10 years, I'm supposed to be paying maybe about even 15% of federal tax. It is something at the end of the day. So it's
$1,500.
Yes, that's $1,500. If right now it's so significant to me. So at the end of the day, you're not just you're trying to look for a way to avoid taxes, not just not avoidance in the sense of legal avoidance. You're trying to reduce your taxes at the end of the day, and you're saving for your future, and it's not taxable. Now imagine somebody that has 500,000 eventually in their TFSA account. Imagine them having a tax of 15-20% of that. That would be very, very significant. So I will always encourage people, take advantage of all these government vehicles to do your savings.
For me, TFSA, or from my experience, if I may, TFSA has been one of the very powerful vehicles that government has given us that people have not really been utilizing, which is sad, really, because the people are concerned with the now. Let me buy RRSP now and I'll get my refund. But you're not thinking long term. Very, very savvy and knowledgeable people have found TFSA to be a very good vehicle for investing, for like maybe investing in the stock market. Because whatever, like Madam said, whatever gains you make in that account is not taxable. So imagine if you had been able to get if you had been around since I think 2013, when the federal government introduced TFSA, you probably would have close to 70,000 cash if you're not investing it. You probably would have about 70,000 cash in your TFSA account. Now imagine that you turn that over to a block pledge, or you turn that into a self-directed investment account. I know people who have 250, 300,000 in their TFSA account.
Yeah.
Imagine that. Imagine.
But only contribute
amount of gains
70K.
you've been
So
able
how
to
did
make
they
in that
get
account.
350K?
Come again?
They can only contribute 70K. The maximum you can contribute to any TFSA right now is 70, 80K, thereabout. So how did they?
So imagine if you put that in that account and you trade aggressively with it. The stock market is really boiling up now. A lot of people are making stupid gains. So imagine what kind of gains you would have that you would not have to pay any tax on.
Yeah.
To me, TFSA is a much better investment vehicle than even RRSP. I know that you get your deductions, but at the end of the day, that's still taxable income. When you start to draw on your RRSP, you're paying tax on it. But when you draw on your TFSA, no tax. Now, the other benefit of TFSA, whenever you withdraw your TFSA, it creates more room for you. So why are we not using it? What I always tell my clients is, if you want to do RRSP, let's be sure that you get, I mean, if you put in like 20,000 into your RRSP, there's a good chance that you get $6,000 refund. So take that $6,000 refund and put in TFSA.
Put it into TFSA.
On both sides. You're investing your RRSP, you're also putting money into your TFSA. So you're winning on both sides with just one 20,000 investment.
Yeah.
So that's my advice to most people. If you have the funds, try and put money into your TFSA account. It's very, very good.
I want to draw attention to what you just said. So even though legally, as an individual, you shouldn't have more than $80,000 contribution room in your TFSA. However, it is possible that there are people who have $500,000 contribution room in their TFSA right now because they've been able to aggressively grow the funds, and then they have withdrawn that money out, thereby creating additional contribution room for themselves to put money in there and then invest again.
Now there's the caveat to TFSA.
Okay, good. That's where I was waiting for you to get there.
Okay, because the first year when TFSA was introduced, I think it was 10,000 the very first year.
Yes.
Some very smart individuals went and they started trading aggressively, and within a year they managed to turn it over into like $500,000. So if CRA discovers, or when CRA discovers that you're actually trading on that with that account, then you're liable to tax, and the tax is really punitive. It's 1% of your gain every month.
Okay.
So you're paying 12% tax.
Okay.
On that particular gain. Some people might still not mind, but I think a lot of people
better than marginal tax rate on my capital gains, anyways.
Yes.
Yeah. Okay.
So they don't want people to be trading aggressively with it, but it doesn't mean that you cannot trade like maybe once or twice a month.
Okay, that's good. So
imagine if you bought Amazon in March with your TFSA account.
Or imagine if you got on the GameStop.
Or imagine if you bought GameStop.
You bought it like $5 and got out at 200. Yeah. That's a game changer.
We're talking about Clubhouse before we came onto this platform. And do you know that the company that powers Clubhouse, the back end company, is actually called Agora. Agora, Agora Inc. or something is AGORA. That company, as at 7th of January when I joined Clubhouse, that company shares was trading at $50. When I checked just last Thursday, the company was trading at $93. Wow. Friday, it went on to $112. Wow. So imagine if I was smart enough to have purchased it at $50 with my TFSA account.
But you don't have
to worry about tax, and I will be $50 richer, even if I bought just one share.
Exactly. Yep. That's true.
I agree.
Then you will have paid tax of 1%.
No, because I'm not trading aggressively. I'm not trading.
Let's even assume that you're paying it to the government.
Yeah, but I'm not trading with it. I'm not a trader. I'm just buying for my account. That's it.
Nice. Okay, so let's hop on to the questions. We have about 9 of them, and we have about 40 minutes to plow through them.
Okay.
So this is the first one, personal. So Debbie, you get this one. How to optimize the situation for family with home-based new business. How do you think that will work?
All right. For businesses, we have the privilege of some deductions that you can deduct, unlike the employee employment income that you don't have so much to deduct. For businesses that is working from home, you have the privilege of deducting your home office expenses for the family. Well, even if it is only one person that is in that business, as long as you have an home-based business and you have an office that is valid, because to CRA, an office in your house must be 100% dedicated to the business. It's not just using my dining table to do business and I'm saying I want to claim part of that. No, it's not. That's not how to do it. You've got to have a dedicated office space, and most of the time we use the measurement, the square footage of the house compared to the square footage of your office to determine that. Now immediately you're able to determine that you can get all the receipts of all the expenses you have at home. Your interest on your mortgage, I'm not talking of mortgage itself, your interest on mortgage, your utilities, your maintenance, repairs, all those stuff that you have incurred for the house, your internet, depending on the percentage that you use for business. All these costs can be prorated based on the square footage of the office compared to the whole house, and you can use that to reduce your taxes, your income at any particular point in time to determine your taxable income.
Okay, I have a quick question as far as this is concerned.
Yeah.
I once had a friend who he had to, because of the location of his house,
yeah,
and the heat in the summer, he had to buy an air conditioning system because his computers were overheating.
Yeah.
Now, would he be charging that cost to the business in the entirety because it's a business cost, or will he be taking a proportion?
It will be a proportion, because that it's still being used by the whole house, despite the fact that he bought it for his office. He's still being used by the whole house, but you have to be able to reasonably determine what percentage of that air conditioner is being used. Yes, you bought it because of the office, but how can you prove to CRA that you're not using it in your bedroom? How can you tell me that you are not using it in your kitchen when there is heat?
Okay.
So,
can I go?
Yeah, go ahead.
So I would like to look at that air conditioner thing from the perspective of a capital expenditure.
Yeah.
So that's a capital expenditure for the home. And so the question is it going to amortize that capital expenditure and prorate the amortization for the bill for the home office, or would he only, because I mean probably his electricity cost will go up, would he only be charging a portion of his electricity cost to the office? That's I don't know, that I'm just like putting it out there.
Okay. If you're looking at it from the asset side of things, the question you want to ask yourself is this thing going to be added to the cost of the house? Can it be separately disposed? Can this air conditioner, is it something that I've attached to the house and I cannot you can't separate it from the house again? But in this case, it's possible to sell it on its own, because it didn't come with the house originally. So it's a separate asset on its own. So I can sell it on its own. So because of that, the cost of that it's sometimes categorized as repairs and maintenance, additional cost. It's not part of your mortgage. It's not part of the house that you're going. It's like I have an office and I'm buying furnitures. You understand that? It's an asset, but at the same time, it's not attached to the house. I can easily remove it.
Yeah.
So
I would be more inclined to just ignore that cost of the air conditioner and just like allocate some of the cost of the electricity to the house to my office and home business. That's what I would do, because I mean it's going to be insignificant anyway, and then to prorate amortization or a capital cost allocation. It's not just worth it. It's a lot of time to do something that's not really significant.
I think we are all in agreement on that.
Yeah.
So let's move right along to the next question. What child-related expenses are deductible?
At the moment, I don't think there is anyone at the moment. Everything ended 2016 or thereabout, when we used to have arts expenses, all the stuff. But now, that's why the government gave every parent, all the children, they gave them an allowance, UCCB. There is no other benefit that you can get from child-related expenses, except for childcare expenses. Let me put that out. Childcare expenses, and you're looking at what else now? We're looking at disability expenses. So if you don't have childcare expenses, I'm not too sure there is any other one.
Yeah. So unfortunately, government of Justin Trudeau decided in their infinite wisdom that there wasn't really any need to get all of those benefits that we used to get. But on a positive note, the child benefit allowance that our people get nowadays is now non-taxable. So even if government pays you 20,000, and I have clients who gets close to 20,000 because they have like I don't know, 50 children. So they get that kind of money and they know that they don't have to pay any tax on it. So that's a good thing.
Well, reasonably, I can tell you, I know of somebody that has 3 children and I got $15,000. 3 children.
Okay. That's some good income there.
Yes, that's it. It was, I was like, I wish.
But it's also a disincentive to working to hard work, because when you kind of start getting that kind of money from government, you tend to not want to work hard, because the harder you work, the more money you make, and then your benefits reduce. So I don't know what the objective of government was for making it non-taxable, but in my own view, this is my own personal view, I think it's some kind of disincentive to working.
I would say
the economy, because some people might still be working, but they work under the table.
Let's take it from this perspective, right? Yeah. The children are going to grow up, and the UCBCB will stop coming.
Exactly.
So, it's just a matter of time. So let's sweat it. Oh, boy. Okay, so Taiwo, this question has your name written on it. How are crypto gains taxed in Canada? Talk to us.
Capital gains tax.
Cryptocurrency.
Cryptocurrency. Oh wow. Well, I mean, cryptocurrency is nice. It's good if you understand it, and if you're making good money from it. But at the same time, you also have to be conscious of the tax consequences of cryptocurrency. So if you're buying cryptocurrency, I think it's wise for you to know that when you sell your cryptocurrency, there might be a gain or a loss. Nobody wants to have a loss anyway. There might be a gain, and that gain, if you're not trading on cryptocurrency, if you're not a trader, that gain is deemed to be capital gain. If you're trading, as in you're buying and selling cryptocurrency like every day or every other day, that makes you a trader in CRA's books. Then that gain is seen as a business, is seen as business income, and is taxable as business income. Now, the confusion that most of us have with cryptocurrency is sometimes we don't know that we have sold. Sometimes we think, oh, I only bought something with my cryptocurrency. Because it's a currency and you've bought something with it, you think, oh, yes, I haven't really sold it. But think about it. You probably bought cryptocurrency. Maybe you bought Bitcoin at $20 or at maybe at $400. Now, Bitcoin is worth about 40,000. A Bitcoin is worth $40,000 as at Friday. So if you're now using that one Bitcoin to buy maybe a vehicle, for instance, you actually sold your Bitcoin and you've made a gain in excess of 30,000, in excess of 39,000. So that gain is capital gains and is taxable.
Wow. Okay. So basically, your
crypto doesn't mean that there's still no gain. There is a gain, because it's all about value. What value did you purchase it at? What value are you exchanging it for?
So if I'm recapping that, basically what you're saying is that my crypto in itself is basically just an asset, and what I do with it is what drives how the CRA would expect me to pay tax on it.
Exactly, and good enough. I mean, some of these Bitcoins, they now have values, unlike before when people were just mining, and now the value is everywhere. So if all CRA needs to do is do an audit and when did you sell, and they can go online and check what the value was on that date. So there's really no hiding place for crypto traders, cryptocurrency traders anymore, or anyone buying and selling cryptocurrency. There's no hiding place anymore.
So just to recap, if you trade it regularly, it is business income.
It's business income,
which is a 15% tax rate as a small business under 500K.
More like 11%.
11%, fantastic. Which is lower than the lowest.
If you're in Alberta, it's 11%.
Yeah, but that's the lowest. That's lower than the lowest personal tax rate.
Yes, it is.
However, but whatever that gain is, it will be taxed at your marginal tax rate if you are trading it personally.
Right? Yep. Now, let's get one thing straight. If you are trading as a sole proprietor, you are not incorporated. You're trading as that gain is added to your other income and taxed appropriately.
Yes.
So personal income is graduated. So it's not like, oh, okay, I have business income, I pay only 11% tax. No. Of course, you have some other expenses, but after deducting your expenses from that income, whatever is left is added to your other, like salary income and maybe other income. Maybe you get dividend from elsewhere. Everything is added together and taxed appropriately using the graduating scale. Yeah.
And if however, you don't, go ahead, Daddy.
I said, which could get to 47%.
Exactly.
Yes, which could get to 47%. So I think that's a very critical thing to point out there.
Yeah.
Now, on the flip side, if you don't actively trade your crypto, you buy and hold and sell, then you buy, then you hold, then you sell. Based on how you are treating it, it's treated almost like shares. So they would say, how much did you buy it? How much did you sell it? What's the difference? If it's a gain, they'll tax half of it. If it's a loss, they allow you to keep half of it to relieve against future capital gains.
Yeah.
Yes. Again, it's not like they tax half of it. Half of it is added to your personal income and taxed again appropriately.
Yeah.
But
so it's a 50%
half of that amount is taxable. Also, just a point to note. Nowadays, you can't really lie about the amount at which you sold a cryptocurrency, because just like you have the stock exchanges now for shares, you also have the exchanges, different exchanges for cryptocurrency. So I personally use Kraken, but there are other exchanges out there that people use. So that means we can actually tell how much you sold your Ethereum for, or your Bitcoin, or whatever. Yeah.
So basically, the information is out there, and there's no point trying.
It's out there and it's available, freely
that
available.
the information is not. It's publicly available. Okay, so let's move right along to the next question. How do I calculate and claim business against my income for tax purposes? So I'm assuming that this is a sole proprietor. I'm wondering how that process would work. I have whether it's a home-based business or it's just something I do on the side that generates income. How basically am I going to report that?
Is that for me or for him?
I can take it, I don't mind.
Go ahead.
Okay.
So for my clients, what I always like for them to do is to do some rudimentary accounting, and it's really simple. Anyone can operate an Excel spreadsheet. So at the end of the year, you should be able to tabulate all of your sales. At the end of the year, you should be able to tabulate most of your expenses. There are some expenses that I would have to probably calculate for you, like maybe your office and home expenses. What's the size of your home? What's the size of that of that space that you use for office? So it's a proportion of your office to home that we're going to calculate and use that to use that proportion for utilities that you have in the house. For some people may have leasehold, they may have like spent a fortune on that office. So whatever you spent, maybe you bought some, you've redesigned the office and all of that will be leasehold. So all of that, that proportion will be used to calculate those expenses for you. But yeah, it should be relatively easy. But I mean, we know ourselves, and we know that some of us can be very, very busy, and some of us can be pretty lazy as well. So some people will come in with all of their bank statement and their expenses in a shoebox and drop it with you maybe on the 29th of April, when they know that the deadline
That is
to actually pay taxes, not file because they are sole proprietors, to pay taxes on that business income is the next day. So you find most accountants working 24-hour shifts, 24 hours on the 29th, because they just have to beat that deadline to help their clients. So but it's basically compiling income that you've made over the 12 months and your expenses as well.
Debbie, you are going to add to that?
I was looking at the question. I really don't know what the person is having in mind when they were writing this question. How do I calculate and claim business against my income for tax purposes? Well, Taiwo has analyzed it's simple, your income and expenses. But if this person has other income, like you are an employee and you have a sole proprietorship, the two of them will be reported separately, but in your personal income tax. If that is what they are looking at, if you have several income, as an individual, I can have employment income. I can have business income. I can have property income. I can have, what's the fourth one now? I can have
capital gains and losses.
Yes, I can have capital gains and losses. So those ones, when I have those ones, it has to be reported as an individual, but it will be different lines for it to be reported.
Also, just to add to what Debbie's just said, I think the individual who has that question is probably looking at what kind of expenses should they be deducting.
Okay.
I mean, there are some basic expenses that you can deduct. Like, I mean, if you are a business person, your telephone expense, your cell phone expense,
the
portion that you actually use for business, because some people will tell you, I do all of my business on my phone. So we could say maybe 60% of that is business. That portion that you use for business can be deducted. And you can always get your cell phone bill from January to December anyway. So you just add it together, and we can use a simple proportion of 60% of whatever that is as a business expense. Sometimes you're having meals with your clients. It doesn't mean you should have meals all every day and say, yes, I'm always having meals. But sometimes you're having meals with your clients. So that meal and entertainment expenses is also deductible.
Yeah.
You could have insurance for your business. Some sole proprietor, especially contractors, like people who do house reno or even mechanics and all of them, expected to have insurance. They're expected to have business insurance. So that business insurance is also deductible. There's millions of expenses like that. So whatever expenses, whatever amount you're spending for your business may probably be deductible as an expense. Your job is to bring everything to your accountant and tell him, this is what I did with this. And he or she will be able to tell you, yes, I think we can deduct this for you, or we can deduct a portion of this for you.
Fantastic. So let's move on to the next question. Last year, I started a business. I registered it. So I'm assuming this is a corporation. Paid for training, but did not get any return. I have slowed down and currently thinking what to do about it. My question is, can I get a tax refund from the money I put into this business?
I think the question shouldn't be, can I get a tax refund? No, you cannot get a tax refund. But can I get a deduction for this cleaning expense that I've paid? Yes, you can get a deduction for that cleaning expense. It doesn't matter how much, as long as the intention is to use it to generate income in that business for the foreseeable future, then that is a deductible expense.
So, and the loss can be carried forward into the future.
Absolutely.
So
if you don't have an income, which means that business that year generated a loss, that loss can be carried. The law says you can carry that loss forward for the next 20 years to offset against future profits. Or if you've had losses in that business if you've had profit in that business previously, you can carry back those losses for the last 3 years of your business.
Yep.
So I think what I'm hearing you say right now is that, one, if this is an incorporated entity, this loss is not going to come into your personal tax in any way. It stays as in the incorporated entity's taxes. However, loss is available for you to relieve against any income that you make in this entity for the next 20 years. Yeah. If in 20 years from now you have not made any income, well, nobody can. Yeah.
Also, if you had not registered a business and you had gone for that same training for the purpose of, generating business income as a sole proprietor, you can also have that expense deducted in your personal tax return under the business section of your personal tax return, which essentially means that you have a 13,000 or whatever amount of training you've got undergone. You can now take that loss and offset it against other income, like maybe your salary and salary or dividend or whatever other income you have. So that means your taxable income reduces and your refund. So maybe that's what that person meant. Your refund will now increase significantly.
On that. Okay, that makes sense. So moving right along. So this person says, can I engage your services for this year's tax filing, and how do I go about it if possible? So when we are done with all the other questions, I'm going to show the websites and contact information for Debbie and Taiwo, as well as Dexteritas, who I represent, so that we can all benefit from that and reach out as we deem necessary. Question 8. I'd like to ask, how does one file tax for a sole proprietorship and personal tax with your household or partner?
Ideally, you can file your your taxes with your spouse. And it is very, very, I will advise people to do it. File with your spouses all the time. Even if you have proprietorship business, like we said earlier, that you can file your taxes together and file maybe on June 15 because it's due then. But if you choose to file yours in April and then there's something for the two of you to claim, you might lose out on it. So it's better for you both to file. But for children, if children are adults, you might fill the same form, but you cannot file together. But if the children are younger, you can file it together as well. Transfer some, you can't even transfer credits to them. They can only file for themselves and get their refunds for themselves. It's only couples that can do that together. And you can do it with business or personal income or employment income. I don't know if you have any other thing, Taiwo.
The only thing that I have is just my observation as far as coupling taxes together for couples, for married people, or as we say in Canada, what's the word that we use? When two people live together.
Yeah.
Cohabitation.
Cohabiting.
Two people cohabitating for more than 12 months. If you're living together with your other half for more than 12 months, that makes you a couple, and you should be filing taxes together. Now, the other thing is when you have kids and you decide to separate, it's actually you actually get more.
Yeah, you do.
You actually get more when you separate than when you are together.
Yeah.
Because each one can claim each of the kids. If they're living with you, you can claim each of the kids as eligible dependent. So you get that extra tax credit.
Yeah.
Which is significant. So sometimes, people have been I'm not even gonna go there, but yeah. it's just funny that Canada wants you to be together.
Oh boy, that's just how do we which buckets do we put that on now?
I don't know.
Let's just put it that way.
I don't know.
Okay, so this is question 9 before we go to the audience questions.
Okay.
When a company is new, has little or no profit, is the money you use for personal things like fixing a car considered a profit to be reported on your personal tax? Now, when I say, so let me interpret this. So the person has taken money. I'm assuming the person has taken money from the business to fix their car. I'm sure the car is being used partly for business, partly for personal. How does that get treated?
All right. When you take, let's make it a straight line for now. When you take money out of your business for personal use, you are going to pay tax on that, especially if it's a corporate entity. Maybe I should backtrack a little. If the business that you're talking about is a sole proprietorship, whether you take some or you don't take some, the total profit you make is taxable as a personal under personal income tax because it's not incorporated. The business is not a separate entity. It's you and you business limited. But if it's an incorporated business, now when you take money out of your business, out of an incorporated business, it means you're getting paid by the company. Whatever you take out for personal use is taxable under the personal income tax. It is not claimable as an expense under the corporate tax. But now you're using your money to fix your car. The percentage of what you use for business is claimable for business. Let's assume my car, I drove 10,000 kilometers for the whole year. And I'm able to track, because that is very, very important. For you to be able to claim anything on your car that you use for business, you have to be able to track all your movements. How many kilometers you used for businesses. So, and CRA has gotten to a point that they want you to give them a document that shows January 1, I went from so office to so office, or from this location to this location for meeting. If you don't provide that, they will not accept it. So the personal side, the percentage that you use for business is prorated based on the total kilometer that you drove within the year, and then it's charged on the total cost that you spent on the car. Let's say the gas, the maintenance, and all those stuff. So it's for you to be able to prove to CRA that this is how much I drove, this is how much I spent on business, and then you can claim that proration on all your costs.
Okay.
The only thing that I can add to that is that for us maybe people in the diaspora, it's not just Nigerians, maybe Africans in general. The reason small businesses fail is because we don't, we can never draw that fine line between what is my business and what is me. Whether you are a sole proprietorship or you are an incorporated business, you always hear people say, it's my business, it's my business. Yes, it's your business. Nobody's denying that. But your business is a standalone, is separate and distinct from you. So whatever income you make in that business belongs to the business. The business can pay you, or you can borrow money from that business, but it is not that it is yours and you can do anything you want with it. If it was in Nigeria or any other African country where, you know, the tax system is not that sophisticated, you may be able to get away with it. But here, that business has a separate business number, just like you have a social insurance number. So that business is responsible for paying tax. That business may be audited, just like you may be personally audited. So you need to treat that business as a person and say, okay, I work for you. Although I owe you, but I also work for you. So it's either you pay me or I borrow money from you. You can pay me by way of salary, you can pay me by way of dividends, or you can lend money to me, but you are separate and you are distinct from me. So it's the same thing with the asset that the business owns. So if the business has bought a car, a vehicle, that's the business vehicle. If you're using that business vehicle for your personal use, then the portion that you're using personally is a taxable benefit to you. Okay? And if you're using your own personal vehicle for business, the portion that you use for business is an expense to that business. You can charge that business for that and get paid by the business. But you must always bear in mind that the business is separate and distinct from you. The best business is a separate entity, notwithstanding the fact that it is a sole proprietor. It's a sole proprietorship. It is still a separate business. You always have to bear that in mind. And that's the only way that your business can be successful. If you're not doing that, please, you know, your business will never succeed. Your business, there's so many books that have been written on why small businesses fail. And one of the major reason is because people tend to see the business as part of themselves. It isn't. It should never be.
I will want to take on something that you mentioned there in terms of buying a car or an asset in the name of a company or in the name of the individual. I will tell anybody that has a business, even if you're operating it for yourself or for a company, whatever, be careful how you name the car. Let's use car for it. If you buy it in your name, it's better. I would say I would rather buy it in my name than buy it in the name of the company. But seek advice very well before when you're buying a car, seek advice in whose name should I buy this car? Should I put the name of the company or should I put my individual name? That's a major issue.
Okay. Since we are not talking about asset acquisition and the pitfalls that arise as a result of such, I wouldn't allow us to dig into that any further. We still have three more questions. So here is a question that came from Kemi, and she said, if I run a business and I'm employed, does it mean my deadline is April 30? I think we discussed this extensively, and my assumption is that June 15 will be the date.
For filing. But for paying, for filing is is June 15, but for payment of tax liable that they're liable to is April 30th.
Okay.
The question is, how do you determine how much I'm supposed to be paying to the government in April without determining without
preparing your tax return?
But the issue is, it's possible, but just you can just make advance payment. It's called advance payment, just an estimate. Do advance payment. Then at the end of the day, when you finalize your financial statement, you can now get maybe a refund or a balance of payment. But it's better for you.
If you are owing as at June 15, then they'll be asking you to pay interest and penalties. You'll be late paying, and then you'll be paying interest and penalties on that.
Yeah.
Okay. So the next question is from Dami. She says, thanks. How do we report the tiny income from TFSA and RRSP? Do we have to report these as well?
No. TFSA is not, nobody will give you a T-slip or a tax slip for TFSA. RRSP, they will give you, if you contribute, they will give you your RRSP slip for deduction from your taxes, not as an income. If they show you income that your account gave you, it's just for your information, not for tax purposes. That's why they don't target tax documents.
Okay. The RRSP income that you get is taxable, but not immediately. It's a deferred tax vehicle. RRSP is a deferred tax vehicle, so you don't pay the tax on it until when you start to withdraw. The only other kind of slip that you get for RRSP is when you withdraw your RRSP, you get a T4 RRSP slip, which basically means you have additional income, and that's taxable.
Yeah.
Okay, so the last question I have here as at now, as a registered sole proprietorship business, are you expected to charge GST?
Yes and no. If you're
you are the expert on this one, but I'll just say this is my perspective, right?
Okay.
As a sole proprietorship, it is how would I put it? You can voluntarily get a GST number, but as long as your revenues don't hit the $30,000 threshold, you do not have any GST responsibilities. However, the moment your income hits $30,000, you are expected to, like any non-small business, compute, collect, and remit GSTs to the CRA, net of any GSTs that you would pay out on your own expenses. Debbie, over to you.
The other thing is that if you know, immediately you register for GST number, even if your income is not up to 30,000, you're expected to charge and remit. So if you know your income is not going to be up to 30,000, your best bet is not to register at all. But immediately you know that you register for GST number, you are supposed to charge and remit. The other aspect to it is sometimes we feel like I'm not going to register, but what of the GST that you have paid for some of the things that you have paid for? You cannot claim them. So if let me give you an example of somebody that bought a car to do Uber, and they've paid GST on a $30,000 car or a $40,000 van. At the end of the day, the GST you paid on that car is not claimable because you did not register for GST. So you won't get that refund that first year. So you've got to be able to balance the two of them. If I don't register, then I'm not going to be able to get my ITC. So it's up to you.
To add to what Debbie has said, people sometimes they make a mistake that, okay, because I'm not registered for GST, it doesn't mean I cannot collect GST.
Yeah.
I once went to a shop where I got a receipt and I was charged GST. And the law is very explicit on that. If you are charged GST, there has to be a GST number on that receipt. If it's not there, then go back to that store, get your 5% back if you're in Alberta. So I went back to her and I said, I don't think you're registered for GST because you don't have a GST number. So please give my money back. She gave my money back. Most people know the law, they just want to use some kind of, so so that's something to watch out for. Don't charge GST if you don't have a GST number. You may actually be breaking some kind of law.
Exactly.
And you know our people, you know how things are in Canada. Everybody is a litigant. Everybody wants to make extra money. So they may sue you for charging GST without GST number. The other thing is a lot of our people nowadays, they have African store, they have African store. They are selling food stuff. If you're selling unprocessed food stuff, you should not be charging GST. So if you go to any African store and people charge you GST for ogede, plantain, by all means, get your money back.
And then I will want to on that, what Taiwo just said. I'm just going to emphasize it, that it's a legal issue. If the government gets to know you're charging GST that you're not remitting, in the first place, you're not registered. Secondly, you're not remitting, you might be finding yourself in a deep, deep, deep legal problem. So I would say, is either you register or you don't charge. That's the straight line rule.
Okay. Now, I want to first allow our panelists to say a bit about themselves. We start to wrap up. So give me 1 second here. Taiwo, over to you. Your 1 minute pitch on why anybody should be doing business with you, where you are located, any information you believe you should share.
Okay. Thank you for giving me this opportunity to boast, to brag about myself and our firm. As you can see on the I don't know if you can say the platform or what Dr. has posted. We are CAFT CPA. We are a professional accounting firm. We're certified accountants, and we're registered with the professional body in Alberta and in Canada. We do everything from audit to corporate taxes to personal taxes. We've got, as you can see, we've got about 14 staff currently. About 6 of them are certified public accountants, certified professional accountants like we are. So we definitely will give you the best value for your money. Our motto is always to save you tax dollars. That's what we believe in. We'll go the extra length to ensure that we maximize your tax refunds or minimize your tax exposure. Thank you.
Fantastic. Debbie, over to you. Tell us a bit about yourself and why anybody should be calling you after this.
All right. I'm the owner of Davio Consult. I stepped out on my own to practice accounting, bookkeeping, accounting, and taxes. I don't do review. I don't do audit. Sorry. All I focus on is personal income tax, corporate income tax, bookkeeping, and accounting. So if you're a medium-sized, small and medium-sized company, get in touch with me. And we're just 2 in my business right now, and we're hoping to expand in the next 1 or 2 years. Thanks.
Fantastic. So since you guys have had your turn, I'll have my turn too.
Of course.
My name is Dr. Ayodele. I represent Dexteritas Professional Corporation. We provide bookkeeping, payroll, accounting, as well as assurance services. So we do notice to readers, review engagements, and audits. And we're currently a team of about 2 CPAs in the group. Probably maybe the other 6, 4 of the other 6 have designations from other locations. So you'll be getting a full pack punch working with us, experienced people who have clarity and understanding of business, small business, as well as are very keen in terms of managing your cash and saving you taxes. So you can reach out to any of us. I'll be sharing our contacts when we are done with this presentation. But the goal is to ensure that we provide you the best value and ensure that you are able to achieve your financial goals for which you started your business. So without taking any more time, I'd like to say thank you to everyone that has been part of this webinar this evening. It has been fantastic sharing our knowledge with you. And we believe very much that our community is growing and getting stronger. And as we get stronger, we continue to lift each other up. So, yeah, I can see Blessing, I can see you. Adeolu Eweje, I can see you. Angela Odude, I can see you. Dami Bo, I see you. Kemi Watts, thank you all for your comments. It's been a fantastic afternoon. I'll say don't stay indoors for too long. Calgary, I can see that the sun is shining behind Taiwo as well. So that means it's weather where he is too. So take a walk, enjoy the evening, spend some time with the family, and yeah, enjoy the rest of your day. Thank you very much, and bye for now.
All right. All right. Can we?
Whew.